Private Equity Exchange 22nd edition. We are very happy to welcome you today and about 1,000 of deal makers, GPs, LPs, and entrepreneurs. I have with me on the studio, I have the pleasure to welcome Christophe Bavière. Hello, Christophe.
Hello, Mathieu.
You are the co-CEO of EURAZEO. We will come back on EURAZEO just in a few seconds. Thomas Rajzbaum, just on my left, partner at EQT. Hello, Thomas. And Oliver Gottschalg. You are, Oliver, a professor at HEC, but also the founder of Gottschalg Analytics. You are a renowned expert concerning performance analytics in GPs in private equity. Thank you for being with us today.
A pleasure.
We were actually on stage a few seconds ago for the plenary session, the opening plenary session of the whole event, with an amazing title, an amazing theme, PE for tomorrow, private equity for tomorrow, how it's going to grow, how it's going to evolve as an industry, but also how it's going to help the real economy to grow and to evolve also. First, maybe we could share with Christophe, you could share with us some key points you've shared with us, key takeaway you can remember from what we just shared with the public a few minutes ago.
We were just, thank you, Mathieu, and we were just exchanging views with Thomas and Oliver just after being on stage, and maybe a feedback. Yes, 2023 is not the best year ever experimented in private equity. It's a tougher year, tougher fundraising, tougher for exit. But maybe a comment that we were sharing together is the fact that if we take a step back and if we look, because the theme is private equity for tomorrow, if we think about tomorrow, I say, and more specifically, if we think about Europe, because EURAZEO is mainly investing in Europe, I would say the future of private equity in Europe is still ahead of us. There's still a huge potential for LPs to invest more money. I don't see that many investors that are over-allocated to private equity in Europe. I don't see that many retail investors that are individual investors that are over-allocated to private equity. And even more important, when we look at the number of investment opportunities, when we look at the maturity of the portfolio companies that we target, I would say the quality of managers, the quality of their ability to use private equity tools, but also private debt, also infrastructure, ways of financing to improve, to accelerate their growth is impressive. So I would say 2023 may not be the best year, but if we look forward, I see still a very good future for our industry for the years to come.
In the end, it's just a risk industry, and you are experiencing a market correction. But again, it's just the beginning with retailization, with ESG, of course, with tech, AI, and also with the platformization, the consolidation of the market, because GPs are merging. Some of them are consolidators, the others will be merged and acquired. Thomas, you work for Equity, you are a partner at Equity. You are the fourth biggest GP worldwide. How do you see this platformization phenomenon?
Thanks, Mathieu. Indeed, it's something that we have seen in the last few years, which has been really a mega trend, this concentration of GPs. I think our view at EQT is that there will remain probably like 5 or a bit more global players in private equity, and then of course quite many more regional players and specialized one. And indeed, EQT has been trying to be on the consolidator front, as we have, for example, acquired our competitor in Asia, Baring, and we now have 200 billion euros under asset management. But more importantly is what the benefit of having such a structure, and I think we see it in many instances. First, have to remember that this is a people's business. Our main asset is actually the people that we have, and having a global brand, having a global platform, and offering opportunity to growth to the team is a unique asset, and I think it allows us to really recruit the best talent in the industry. And then, and we spoke a lot about it in the panel, is also it allows to offer a real toolbox to the managers that Because of our scale, we're able to invest a lot in digitalization. We have, for example, like 25 people who are working full time. They're all coming from Amazon, Tesla, and Spotify because we're Swedish. And they're here to help the portfolio company in their digitalization journey. We can invest massively in ESG. We have a full team working on this, but also we spoke a little bit about our commitment to the science-based targets, so to respect the Paris Agreement, which means that all of our portfolio companies need to reduce their carbon footprint by 50%. And this type of thing that you can do when you have like a large platform and have
a critical size.
Yes, exactly, critical size. And then we can see that many of our clients, our LPs, allocate more and more capital to a more limited number of funds, and they need to have in front of them this larger platforms. So it's something that we really think will continue in the future. I think we're only seeing the beginning of the benefit of that. We're thinking about a lot of different investment that we can make to help the portfolio companies. It allows us to specialize the team in the investment, to have real specialists in sectors, but also in subsectors that we can deploy across funds. So we believe that it's something that will be differentiated in the future.
Thank you.
If I may offer, even in a panel that's labeled, private equity for the future, with a historic perspective, it may actually be back to the future in many aspects, because more than ever, I would argue that value creation is absolutely key and absolutely essential. And Christophe, to your point, 2023 doesn't feel like the best year. I would probably rephrase that. It doesn't feel like the easiest year, but at least if you look at the historic perspective, it's the not so easy years that turn out to be really good investment vintages. So if I run data through a couple of decades, it's those vintage years that follow economic contraction, where the stock market in that year was actually negative in the stock market returns, which turns out to be, in the long run, the best private equity vintages. And as it all boils down to value creation, I think the question of platformization is also meaningfully approached from the question of how does the platform add value? How does it value vis-a-vis the limited partners? Ease to access certain vehicles, offering diversification within the same platform. Value add, as you emphasized, Thomas, for the portfolio companies through the toolkit that both of your platforms are offering. And then at the portfolio company, at the deal level, ultimately helping the entrepreneur offer the right type of capital, the right flavor of investor to guide them through whatever may lie ahead. And that brings me to a novel kind of service that we're offering, which basically tries to take value creation at the very inception, when the deal is being formed, where the deal flow comes to the fund manager, and where the management teams have to decide whether or not to take on private equity into the capital, and then which private equity firm to interact with, to deal with, where we're trying to give them a bit more of a guidance and allowing fund managers to signal their type of value creation. Are they really company builders? Are they really value-added managers for that type of business? So allowing them to identify analytically from the hard track record of the fund manager, is the manager really best in class? Is this deal a good fit for that manager? Are they building businesses through organic growth or through build-up initiatives, through ESG, through digitization, rather than just riding multiple trends? And then probably most importantly, are they a safe pair of hands who can also guide companies through downturn situations? And I believe this type of information helping GPs not only with analytics to attract the right capital, but also help with the matchmaking between management teams and private equity will have an increasingly important role going forward.
Thank you, Oliver. So a new offer, new tools for amazing trends that help the whole industry to evolve. Just a question, because of course big means bigger issues, bigger amount of people to manage. Because your job in the end is to back entrepreneurs. So how do you feel about the DNA of a big group and also the DNA of entrepreneurs you have to maintain, you have to cherish in order to continue in a proper way your job, because it's the DNA of your job to invest in entrepreneurs. So how do you grow and in the same time keep this this craziness, this entrepreneurial point of view and DNA?
I would say this is probably the most difficult part, but if we look at what we ask our portfolio companies to do, we invest mainly in mid-market companies born in Europe. what are we asking them to do? We are asking them to do buy and build strategies, so to acquire their Spanish, Italian, German, Swedish competitor. Yes, it brings a lot of complexity. We are asking them to expand in new geographies that they don't know that very well, for example, Asian markets. So yes, it brings a lot of complexity, yes. But I would say our industry, private equity industry, has to do exactly what we are asking our industrial, plain vanilla, traditional businesses to do. So it's not more difficult for us than it is for the portfolio companies we back. And definitely, it is also a source of improvement. It is also a source of, it is also a search for excellence. If you do that well, if you keep a dynamic momentum, if you don't lose your entrepreneurial spirit, which obviously is a risk, you also create, and if you want to attract new talents, you attract talents that are European or international by nature, that are digital born. We talked about how we can use better, how we can better use artificial intelligence tools. You are also able to attract, if you do this kind of strategy very well, you are also to attract and to retain, because at the end of the day, our industry is just about attracting talents. We have no other assets than the talents of the people that are in our teams.
It's actually interesting to look at this from the macro perspective. You asked the big question about what's the magic of private equity? Why can private equity outperform? And how can it outperform at scale? And I think there's a huge advantage is actually that the incentive structures in place allow you to maintain that entrepreneurial spirit. 200 billion EQT is brought down into how many individual portfolio companies. And they're all incentivized appropriately with management teams. It's not a conglomerate of 200 billion that's managed in one standard way, and that standard way often, at least based on management knowledge and science, will kill entrepreneurship, but it's smaller entities appropriately aligned. You can align on ESG, you can align on digitization, and I think that's a very, very powerful tool that private equity can continue to leverage going forward.
Thank you very much for your attention. We will follow on with more interviews, more speakers, more impressive speakers. Thank you, Christophe, Thomas, Oliver, for being with us today. Have a nice day and see you in a minute.
Thank you.